Today we saw colossal buying in chip stocks as traders flocked to last year's darlings that stalled out last week. Nvidia led the group as usual, but we saw some terrific action. Some of the beaten down semis like AMD, ARM, Qualcomm. I think this move could last as these companies have great earnings momentum going into 2025.
Jim Cramer highlighted a strong rally in semiconductor stocks, led by Nvidia, with optimism for continued growth into 2025. He contrasted this with challenges in the processed food sector, where GLP-1 weight loss drugs are driving reduced consumer spending on groceries and dining out, pressuring companies like Kraft Heinz and Campbell to rethink their strategies. Cramer pointed to a Cornell study showing GLP-1 users cut grocery spending significantly, signaling a shift in consumer behavior. While early fears of broader economic impacts were overblown, processed food companies face real challenges in adapting to healthier trends, unlike semiconductors, which continue to thrive. He emphasized Nvidia's leadership in AI and semiconductors, with its strong growth and resilient stock performance. Cramer advised focusing on tech stocks like Nvidia for long-term growth while avoiding the struggling processed food sector.
But there are some chips that, frankly, can't seem to get off the ground. The potato chips, which fare particularly badly in a little-noticed new study out of Cornell's business school that shows that GLP-1 weight loss drugs are having a real impact, a meaningful one that commands attention. There's a definitive drop in processed food sales in this country, and it is being linked to these GLP-1 drugs. First, some background. In the middle of last year, a wave of fear came over the food group. These GLP-1s from Eli Lilly and Novo Nordisk were viewed as grim reapers, slashing earnings wherever they went. We figured food sales would come down, then earnings for supermarkets could get hurt, and at one point, at the height of fear, an analyst tried to assess the impact on aerospace and airlines if more people got thin. It all got pretty darn fanciful, and especially eventually rationality returned, along with buyers for pretty much everything. Now the hysteria is over, but maybe there was real cause for concern. This Cornell study that I like so much took a look at use patterns and concluded that, I'm going to quote here, households with at least one GLP-1 user reduced grocery spending by approximately 6% within 6 months of adoption, end quote. The study goes on to say, quote, given an average monthly grocery expenditure of $630, this translates to an annual reduction of $416 per adopter, end quote. Hey, that is big money for most Americans. The GLP-1 drugs also reduce food consumed away from home, with breakfast spending declining by nearly 4%, dinner down 6%, fast food particularly hard hit. I think you might see something about this when grocery chain Albertsons reports next Wednesday. At the very least, the supermarket's management should have to address this report's findings. But it's the packaged food companies themselves that have the most to fear. As the report comments, quote, companies that rely heavily on caloric-dense processed or indulgent foods are likely to face declining demand and need to reassess their product portfolio to remain competitive, end quote. In fact, the Cornell report directly posits that sales weakness from Kraft Heinz and Campbell's might be attributed to the GLP-1s. According to the report, the food companies can protect themselves by changing package sizes, offering smaller portions, producing foods that are healthier and more convenient. I think that makes sense, but in the end, these companies are all about processed foods. Come on. It's awfully hard for them to change their stripes. Now, lots of investors have turned on the makers of the GLP-1s. Last night, I got a call from someone who complained about how miserably Eli Lilly's stock has done, in large part because he bought it in the 900s. I totally get that. I know the stock's plummet to the 700s has sickened a great many shareholders. But I think that these drugs have multiple benefits, and their staying power, questioned by many negativists, may be stronger than the critics think. The pattern seems ingrained already, and the pain the processed foods we're supposed to experience might finally be arriving. To me, it's simple. You should buy one kind of chip that's changing the world, the semiconductors, and avoid another kind of chip, Frito-Lays. It's ironic. We used to regard the foods as safety stocks and the semiconductors as high flyers with huge downside. Now there seems to be nothing safe about the foods, but the semis, lots more staying power than anyone ever thought.
Nvidia gaining some more ground today. It was obviously one of the top winners for 2024. Tell us what you're paying attention to here, Joe.
Yeah, another stock that's seen some consolidation lately. This is an interesting name because it dipped down below 130 a couple of weeks ago, and that set up a head and shoulders topping formation. And every trader that looks at these stocks was saying, hey, that's a head and shoulders top. It's an opportunity to short here. Well, what happened was it was a failed move. It dipped right back above 130 after a day. And oftentimes when I see these failed moves, you see fast moves. So I love that it stayed above 130. I love that when it got back down to that previous previous resist or support, which was broken, that it turned back into support, and it's rallied since then. So this is looking very strong to me, and it looks very good to me, and it's a great sign for the stock market to have Nvidia leading the way, leading the charge again, so we can get a positive January.
And KG, what's your read through when it comes to the chart on Nvidia?
Yeah, it's either going to be a breakout or breakdown for right now. I mean, that consolidation that he's mentioning here has been intact pretty much since October here. We did hit those highs around $152.89, but we have also kind of tested that 127, 128 level, and buyers have been stepping in. And the reason why I say it's either a breakup or breakdown, primary trend obviously for last year has been to the upside, but you do actually have a wedge pattern that is going to take place. And the apex of that wedge is actually going to pretty much converge around the 15th, 16th of January. So that's really where you want to make see a decision being made for a lot of technicians out there. And the bears just have not been able to knock this name down. But if we do get any type of formal breakdown, it has to be below that $127 level. And then the next area that I'm going to be looking for is $118, which pretty much coincides with the 200-day moving average. RSI actually is making lower lows as well as lower highs. So it actually has been bearish or consolidating for that matter. And the MACD actually did just complete a cross over the last 24, 48 hours here. 12 EMAs above the 26. That is actually bullish. So Diane, right now, I mean, no one's been able to really knock the stock down significantly. The trend is kind of your friend. And until you actually do see a meaningful break below 127, you got to think that this is more of a consolidation before a break higher.
All right, Joe, I'm sending it back to you for your final thought when it comes to Nvidia, especially because, the way the analyst community looks is still the market leader, still expected to dominate. But what's your final thought when it comes to Nvidia as one of your key trades here?
Wholeheartedly agree 100%. The trend is your friend. And as it gets lower, the valuation just gets better. We're talking about, 30-ish PE for a company that's growing, 100%, in their revenue. It's just a phenomenal growth story. So the growth is still there. The PE is high, but given how high their growth is, it actually makes sense if that sounds crazy. So when you get these dips back down to 130, 127, there are buyers ready. There are people ready to buy these dips. So until that narrative changes, I don't think the bull story changes. So yeah, I just think it's going to continue higher, and looking forward to all-time highs again. If there's a good jobs number next year, it'll be there in short order.
Oh. Okay, all right, and let's talk about your final trade, Joe. You've got Alphabet on your list. It hasn't performed as well as many of the other members of the Mag 7, but it still beat the S&P 500 last year. But tell us your view on Alphabet.
Yeah, I love the name. The third component of the AI story is going to be the software. They got off to a slow start, admittedly, on their LLM. They had, they botched their rollout. Everyone was saying that ChatGPT is better. I think they've done a lot better since then. They've had the quantum computing announcement. A lot of people got excited about that. I think that's down the line, but that just shows how powerful the Alphabet company is. They have so many, they have so much resources to deploy here. So they have the most data, in my opinion. They have the best storage of this data, and they are going to be putting it to good use. And that is the name of the game for AI. They will be profiting off of this data because they have the search component, which is their core business. So for me, I think they are best positioned to utilize this new revolution, and I think it's attractively priced here to do so.
All right, Kevin, then let's go take a look at the technicals when it comes to Alphabet.
Yeah, this one's a tough one here, Diane, because it actually has had a decent year if you're still looking at the trend, even though it has been underperforming compared to, say, a Meta or an Nvidia. But the reason why this one's a little bit tough, you have a little bit of a cup and handle pattern that has taken place for pretty much forming the handle right now. But the problem that I actually have is that this handle is actually forming a head and shoulders pattern. And we're actually seeing that over the last 3 weeks or so. And we're pretty much testing the neckline here right now, sitting at around $189, $190. So if we actually do get a little bit of a break of that, you might see some sellers actually coming into the name here. That also coincides with the 20-period moving average.
Today, semiconductor stocks, led by Nvidia, surged on strong earnings momentum, with AMD, ARM, and Qualcomm also gaining ground. Conversely, processed food companies like Kraft Heinz and Campbell are struggling as GLP-1 weight loss drugs drive reduced spending on calorie-dense food. A Cornell study revealed significant declines in grocery and dining out expenditures among households using these drugs, urging food companies to adapt their portfolios. Nvidia remains a market leader, with bullish analysts praising its AI-driven growth and strong fundamentals, while food stocks lose their appeal as safety investments. This market shift underscores the growing importance of semiconductors and the challenges faced by traditional consumer staples. Can food companies successfully adapt to the changing consumer landscape driven by health trends? Are semiconductors like Nvidia the best bet for long-term growth, or do you see other sectors outperforming?